by the way, I'm Joe Dillon. I'm our Director of Customer Success here at Bitwave. I come from the world of public accounting, so I'm a CPA. So, I think about a lot of what we do from that accounting lens. And I know we have maybe a predominantly US-based group here. But, Bitwave, definitely, we have a lot of customers in Asia and in Europe. And I think, that's why we brought some experts in today. You talk to me, I'll talk to you about FASB, SEC stuff all day. But when it comes to European regulations, we brought in some real pros here. And we want to talk about two things here, which is MiCAR and TFR, which is the new regulations that have come out in Europe, the markets and crypto assets regulation, and the transfer of funds regulation. So we have the perfect people to talk about it here from EY Switzerland. We have Maxime and Anna Carolina. If y'all don't mind just, introducing yourself quick here. Maxime, let's start with you. Do you mind telling us, who you are, what you do at EY, and how you find yourself in the digital asset space?
Sure. My name is Maxime Ochrymowicz, EY Switzerland. I'm in the digital law team in Zurich, focusing mostly on digital assets and emerging technologies. We are supporting financial services here in Switzerland and around the globe to better understand and comply with the legal and regulatory requirements. Today I will speak about MiCAR. So it's funny for me to hear from an American accent actually about this regulation, since it's European, right? So I was quite surprised to hear MiCAR. So if you allow me, I will continue with my European and French accent, and I will continue to say MiCAR. I'm delighted to be here with you today, guys, to talk about the recent developments of the European regulations. Over to you, Carol.
Thank you, Maxime. I hope you all listen me well. My name is Ana Carolina Brönnimann. I am a Brazilian lawyer and have worked in Brazil in many criminal cases involving anti-money laundering. In the last 5 years, though, I have been living and working in Switzerland, and I'm part, together with Maxime, at the EY Digital Law team, and where I have specialized myself in the AML crypto compliance field. So thank you very much for the opportunity of being here today.
Yes, thank you. Thank you. So let's start out, Maxime. I'm going to pick on you first. I want to start on MiCAR, that kind of all-encompassing new regulation that's come out. This is a new topic for a lot of the folks in the audience here. Would you mind telling us, maybe just give us the background on what is MiCAR? What does it cover? What does it mean? Let's start high level here. What does it cover? And by the way, we are offering CPE for those CPAs like me who always, maybe are struggling to get your CPE credits. We are offering CPE for these sessions, so you'll see some poll questions pop up. I think one popped up right now. We're going to continue this conversation, parallel to that poll question being out there, but just a heads up, it's out there. So Maxime, tell us about MiCAR.
Okay, then let's start about what is it about this new regulation, right? MiCAR stands for Market in Crypto Assets Regulation. This is the new regulation of the European Union that aims to create a harmonized framework for the issuance and the provisions of services related to crypto assets. It's basically to avoid to have different countries regulating crypto services in a different manner, with all the complications that this would bring for one unified market. So an important thing maybe to clarify and understand from the beginning is that MiCAR is not a regulation that is replacing previous regulations, but comes additionally on top of the existing European market financial laws to fill the gaps. So if countries have started to regulate, they will have to comply with it as the law from the Union prevails. So yeah, what are the objectives, you ask? So it is to provide legal certainty for products that are not already covered, consumer and investor protection. Regulation is needed for market integrity and to make sure that people can invest in a regulated environment, support innovation, and at the same time to ensure financial stability. As some of these crypto assets become more and more mainstream, the legislator wants to make sure that they don't threaten the financial stability. So yeah, basically that's it. It entered in force in June 2023 this year. So currently we have a transitional period, but it will start very soon. Sooner or later, I mean, some things that are gradually coming into place and start to be applicable. Stable coins first, and the rest will follow. But it will be fully applicable in December 24.
Got it. So we got a little bit of time to get up to speed, but it's coming fast here. So thank you, Maxime. Anna Carolina, I want to move to you. Given your experience in as a lawyer, and I think the idea of anti-money laundering is a topic that I know we're definitely familiar here in the United States. But can you explain to us, so what really is TFR? The transfer of funds regulation. What is it? How does it relate to the kind of maybe AML type regulations we might be familiar with already?
Very good, Joe. Thank you for this question, because I think it's important that we understand since the beginning that TFR, which stands for Transfer of Funds Regulation, it's part of the EU legislative package on the anti-money laundering and counterfeiting finance terrorism. So this means that this law comes into place to support really the fight against money laundering. Having said that, it's important that we understand that this regulation has existed already in the EU since 2015. However, it did not contemplate as well crypto assets and crypto asset service providers. So the aim of this recast of this regulation, the new transfer of funds, is extend the regulatory framework already existent to as well these new players in the market. The idea, though, is that these service providers now start complying as well with several obligations, and all of them with the intention, final intention, of course, to really enforce or actually strengthen the fight against money laundering.
Wow, thank you for that. So pretty interesting, where we have MiCAR, which is like, Maxime pointed out, this is genuinely new regulation, whereas with TFR, it's maybe folding crypto into some rules that have kind of been in place in the traditional finance world in Europe for a while now. So let me go back to you, Maxime. Let's go a little bit deeper on MiCAR. Can we talk specifically, about some of the specific requirements? Now, frankly, I learned a lot of the requirements from you. So, I understand that the regulation, it does a couple things as far as, I think, identifying, who this applies to. It identifies issuers of crypto assets versus service providers. And it gets into, certain assets are scoped in and scoped out. Would you mind maybe going a layer deeper as far as the actual kind of requirements of the regulation?
Yeah. I mean, if you didn't scare the audience, it's a complex topic, and let me unpack that a bit. So maybe first let's start with who's in scope. So all natural and legal persons that engage in the issuance of crypto assets, offer crypto assets to the public, are admitted to trading with crypto assets, and if not, even those that provide services related to crypto assets in the Union or to European clients. So pretty much everybody that is involved in the crypto space. Then we have different rules depending on the type of the tokens. So there's 3 categories of crypto assets that are regulated under MiCAR. The first one is asset reference tokens. This is a type of crypto assets that reference other values or rights or combinations of both. The examples are, for example, stablecoins that are pegged to a basket of multiple currencies, commodities, or a basket of other cryptocurrencies. We've seen that, we'll probably see more in the future, but what we know more currently is the e-money token. That's the second type of tokens. And this is a type of crypto asset that references an official fiat currency, for example, a token that is pegged to €1, or we are using the dollar for USDC or Tether, for example. So it's also a form of stablecoin, but they're more similar to traditional electronic money because they can be redeemed for the official currency they refer. And then finally, we have the rest, simply called the other tokens. So those are the ones that are not one of the 2 kind of stable coins that I just mentioned, and their functions and characteristics depend on their design and purpose. And here we have utility tokens, security tokens, but also other cryptocurrencies such as Bitcoin or Ether and so on. So one layer above, if we continue, or maybe further, would be that it's similar to systemic banks. So the European Union wanted also to kind of add a layer of security, I would say, or a safety net. And depending on the volume issued or traded, some subcategories of so-called significant tokens for both stablecoins categories and crypto asset service providers are to be considered. That's why you might read in the newspaper that MiCAR is mainly focusing and regulating stablecoins. That's the reason. So now you could ask me, but why the difference? Why, right? Why not simply treating all the tokens as securities, for example? And this is because different requirements will apply. So we'll have different requirements of licensing or authorizations that will be required. And depending on the design and the purpose of the token, this will be treated differently. So now I'm coming to the obligations, Joe. And let's start with the crypto asset issuers and the service providers. They will have to comply with transparency, disclosure, authorization, and supervision. So for example, similar to what happens in traditional finance with the prospectus, crypto assets issuers must publish a white paper for investor containing specific information about the crypto assets to be issued, such as its futures, risks, rights, and obligation. Important here, guys, is to keep in mind that crypto assets issuers are also liable for any damage caused by incorrect or misleading information in the white paper. Then we have the crypto asset service providers. And those are entities that offer services such as custody, exchange, trading, or giving advices. They must obtain an authorization from a competent authority from one of the European member states before they can go and provide their services. Unless, like a bank, for example, I don't know, let's take an example of an American bank that is already implemented in Europe and has already a branch that is established and compliant. So this means, of course, also complying with prudential, organizational, and conduct of business rules, but also with anti-money laundering obligations.
Wow, Maxime, so you just said something there which really stuck out to me. You mentioned like a white paper. So like, you know, we have a lot of what I would call crypto native customers here at Bitwave, whether they're token issuers or DeFi protocols or blockchain networks themselves and their foundations. You know, we work with all these types of folks. You just said when determining, you know, the design and function of the token to determine what rules might apply, that the regulators may go and really look at the white paper. You know, this is something that we talk about, you know, the link between accounting, finance, legal, and operations. And sometimes those things aren't married, but if those, you know, operational things like what's in your white paper is going to ultimately drive your compliance requirements, you know, for our, is it safe to say, like, you know, for our accounting, finance, legal folks in the audience, like you really have to be working really closely on the operations side to make sure that you understand the repercussions of what you're putting in the white paper and what you're saying your token does? Is that a big concern?
Yeah, absolutely.
Yeah, it's got to be. Okay, so okay, Anna Carolina, let's go back. Let's pivot back to some TFR stuff. Can you walk us through, you know, what are the basic requirements? Essentially, you know, you said these are existing kind of regulations. This is bringing crypto, you know, into the fold. What are they asking? You know, what has to happen? What has to happen to be, you know, what are the obligations to be in compliance with the TFR rules?
Very good, Joe. If my colleague Maxime has not scared the audience, I hope that I will not continue doing the same, but I just want to raise really awareness about this topic. So just for me as well to make sure that everybody is on the same page. So TFR basically entered into force together with MiCAR because these two pieces of regulations are interconnected. In which sense, you may ask, Joe? So basically, TFR, the scope of TFR is interconnected with MiCARs. This means that not all crypto assets, for instance, fall into the scope of TFR, the same as my colleague Maxime just said. Not all crypto asset service providers will fall as well into the scope of TFR, such as MiCA's limitations. This means that, first of all, you as an operator in the market or with you exchange crypto assets, you should first know actually if you fall into the scope of MiCA or TFR. If you fall, though, into the scope of TFR, it's really important that you understand the obligations that you need to comply with. Because the idea overall is that every time a CASP, as they call crypto asset service provider, a CASP, a regulated CASP, transfer a crypto asset to another CASP, for instance, they do also send some pieces of information about the originator who is sending this crypto asset, and as well as the beneficiary. So this means that you as originator CASP, you have to comply with obligations such as verify, for instance, the information given to you by your customer and compare that against to reliable sources. So we need to verify if this information actually is the correct one before transferring the funds, right? The same thing about the beneficiary or the beneficiary CASP. Whenever they do receive these funds or the crypto assets, they will need to as well check, verify the information received, and if this is okay, in order to really transfer the money as well to the beneficiary, to the recipient. And on the middle of these two obligations, we also have the intermediary CASP, who pretty much has both information, like obligations on the originator and the beneficiary, and of course needs to really adopt a risk-based approach in order to operate the business. So pretty much, and here I'm I'm summarizing very much the obligations, but in the law, it's pretty well described, and it's really important that we understand that in order to really make business in a safe environment.
Wow. Yeah. Yeah. That's a lot. And, I think about that. What I'm hearing from you, Ana Carolina, is, along with transaction data, is this other information that comes along with this. We think a lot about data on the Bitwave side and what's included. This seems like it's going to add, maybe quite a bit and responsibility to make sure that information is getting passed through. That sounds sounds like quite the obligation, if I can say so.
It does, Joe, and it has a real important connection with GDPR as well. I didn't mention it yet, but it's important that whomever is processing these personal data, for instance, under the TFR, should really do that in full compliance with GDPR and only for the purpose of preventing money laundering. So okay. It should not be used, for instance, for commercial purposes, for instance. So more to come as well on this matter.
Great. So Maxime, coming back to you, like we said at the beginning, we got a lot of folks here, US based, right? If I put myself in the shoes of maybe, like I said, I work for a crypto native company. I'm in the US. Can I ignore this stuff? Does this matter to me, or do I still got to pay attention to what's happening over across the pond?
Well, sure. Then this is funny that you say that, because I believe now on the audience I see 165 persons are following us and watching us. So they must maybe think, why two people from Switzerland? To make it even better and the joke even more funny, a Swiss guy and a Brazilian colleague that are not even from the European Union are telling you about European regulations, right? And here I'm coming in, this is why. So MiCA's jurisdiction is not limited to companies operating within the Union. And basically, it just doesn't matter where your office location is. MiCA applies to both issuers and service providers as long as their actions are related to the European market, which means MiCA is applicable to a firm that is offering services either in the EU, so European Union, either to European clients. Simple as that. So, yeah. I mean, as crypto is borderless, I believe that there's some relevancy to talk about it. And actually, with Carol, we're going to a lot of Swiss banks to explain them how they could be impacted, even though we are not in the unit, right?
Wow. Yeah. So, this is one of those things where some things we love about crypto, you just said it, like it's borderless, right? It's easy in order to provide service to someone halfway across the world. To be honest, this is a little bit sobering, right? It's that same, frictionless part of crypto that lets you do all that. Now you also, got to pay attention. It's not all just freewheeling. You got to make sure you're following the rules. So, and if you're providing service at all, to folks in the EU, then it's going to apply. So what I'm hearing a lot about. Oh, by the way, for the audience here, I know some folks are diligently looking for those poll questions. We got another poll question up, so make sure you answer that. So it sounds like, I hear what I'm hearing from both of you is, the first step here is determining, are you in scope of these regulations, right? Like and to be honest, to the, relatively uninformed person, it sounds kind of complex. So Maxime, maybe just focusing on the MiCAR stuff. What would you recommend to someone? How do you talk to, a client or prospective client about that consideration? Like, what is step one of, when I hear regulation, and maybe this is my old, my public accounting days, I think risk, right? So I want to mitigate my risk. I want to make sure I'm in compliance, but I'm uninformed. What would you recommend? Where do I start to try to figure out, am I in scope or what I should be doing?
Well, maybe let's zoom out, because there's not, I think, only this challenge. And this is not new. I mean, crypto comes with significant challenges to financial regulations. There's lack of transparency, regulatory ambiguity. We see with you guys in the US, this is like a huge topic. The centralized nature of the crypto space itself, right? So one of the issues inherent to all emerging technologies, now we hear the buzz AI everywhere, right? Is that the market has and will evolve rapidly, and regulation will have to do its best to follow, even though it's complicated. So we cannot expect such a complex topic to be regulated easily when we see that the regulation around the traditional finance is already a challenge. So at least I would say the same level of attention is needed, both from the public, from the market, and from regulators, to ensure that MiCA and TFR at least have a chance to address these issues. So that would be the first thing. And here it's also important to remember the context. So even though it's a big one, we have to remember this is only the first step towards regulation. Before the text was even published, and this is quite funny, the industry was already calling for MiCAR number 2 to fill the gaps. And the reason for that is actually that even though, and here I'm only talking about MiCAR and not TFR, MiCAR is already covering a lot of aspects. Some gaps remain and will get bigger as the crypto space evolves. And here, the challenge, I would say the big challenge, is that currently MiCAR is not covering everything. And MiCAR is not covering, for example, NFTs, lending of crypto assets, DeFi, DAOs, decentralized autonomous organizations, pardon my French-speaking accent, intra-group services. Those are for the companies providing crypto services to a parent company, for example. And of course, all the other financial instruments that are covered by all the existing financial market laws, like securities, including ETFs, ETPs, and so on. This is out of scope. Now, we already saw that a lot of companies, and that I believe is, you see that every day on LinkedIn, right? It became even like a source of memes. They claim to be decentralized when they are actually not. They don't have much decentralization. They're just selling that, right? And here we can expect that even more will try to do so to avoid to fall under MiCAR scope. This will be also a challenge since DeFi is out of scope. And finally, maybe one of the biggest challenge we see as lawyers is the fact that, okay, well, we have now this regulation that is coming, but this is theory, right? How all this will be implemented in practice. That's the question, and to me the biggest challenge.
Yeah. Marrying, I find this over and over again. Crypto is a place sometimes where marrying theory to practice becomes really hard, right? The volume, the data, there's so many aspects of it, of like, yeah, cool theory, but like, how do you actually execute that? So,
Yes.
All right, we have just a minute or so left. Before we wrap up here, Anna Carolina, anything real top of mind that you would tell people, like, hey, this should be at the forefront of your mind as far as, mitigating risk as it relates to TFR? I mean, you've been on the other side. You've been in the court cases, anti-money laundering when it goes bad. So, what should somebody be thinking about to make sure they don't end up in that spot?
Absolutely, Joe. So let's start with, first of all, an impact assessment, right? Analysis. So understanding whether your business will fall or not under the scope of TFR. After doing this impact assessment, I would highly recommend that you do a gap assessment, because if yes, so most likely you're not fully compliant because this is a new regulation, these are new obligations, and if you're lucky enough, the gaps that will need to be remediated will be not that long or large list. But on the other hand, if this is not the case, you need to start working fast, right? And of course, remediating whatever needs to be remediated. Just for your information as well, we have, as I mentioned, TFR will start applying as from December 24, and these months until this moment will follow a lot of consultations from the European banking authorities and guidances and consultations. So it's important that we keep attentive to whatever will come and react fast, because it will come, and it's better to be prepared when the regulator comes.
Totally. Well, you know what? I'll say what you didn't, which is, if you got questions about MiCAR and TFR, you might want to give these folks right here a call, okay? Because this is, like I said, in our chats, all prepping for this, I learned a ton. So I wanted to make sure I shared your contact info with everybody right on the screen here. So everybody should be able to see this. Get in touch with Maxime, with Anna Carolina, if you have any questions about this. They are obviously the subject matter experts here. And by the way, it's late for y'all. Wanted to say thank you so much for staying up with us and joining us today. And thank you to everybody in the audience for tuning in. Super appreciate it.